So that you mentioned indicators and then you mentioned patterns. So I'm curious, are you saying that patterns are more accurate than indicators, or are you saying that you use indicators in conjunction with patterns together?
You use them in conjunction together. So let me give you an example. So one of the models that we created is something we call HARP. Now I won't go into all the details, but I'll share with you. So I created this model called HARP, and HARP stands for healthy stocks. The H in HARP stands for healthy. The A in HARP, like the harp, like the instrument HARP. The A in there stands for attractive prices. The R stands for risk, and the P stands for profit potential. So before we put on any trade, one of the things we want to do is we want to make sure that the stock plays the harp, as we call it. And I got that story, or at least that acronym. I thought it was kind of cool acronym to remember because there's a story in the Bible that talks about a king who was tormented, and this little boy would play the harp. His name was David. He would play the harp, and every time he played the harp, it suited the king, and then he was able to calm down. And I felt like that's kind of how the market is. The market torments a lot of people, myself included. And so every time we get tormented about this market, what is it going to do? What's it da 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 da? And I say, okay, are we playing the harp? Is the stock that I'm about to get into, is it playing the harp? And so the H, I'll give you this example. All we do is we use a moving average, okay? And the moving average that we use is the 50 simple moving average, okay? Now, nothing unusual about the 50 simple moving average. Everybody knows the 50 simple moving average. You'll hear a lot of people talk about the simple moving average. But one of the things that we just did was we said, okay, two criteria that we want to see in a 50 simple moving average is one, it has to be trending higher, pure and simple. But the only difference we did was we said we would look at this on a bigger time frame, okay? And what that did was it gave us a bigger picture of what the stock was doing. And so if we know that the 50 simple moving average is trending higher over a period of, let's say, 10 years, without even thinking about anything else, we automatically know this is a healthy stock, just like that. And so what that does is like now we said, look, what we would never do is be in any stock where the 50 simple moving average is trending lower, ever. And that's all we did. So just by eliminating it, I don't care how great the story is about the stock. I don't care what anybody is saying about the stock. The rules that we've set is we would only invest or trade in stocks where the simple moving average is trending higher. And that alone by itself has saved us from so many trades that we should not have got into. I'll give an example of like when the pandemic hit and a lot of stocks were dropping. One of the biggest companies that a lot of people were saying get into were airlines, casinos, cruise lines, right? And people were saying get into these oil stocks, get into them because they've been beaten up. But if anybody went back, you'll see that they were all below the 50 simple moving average. And so when those started happening, we said to all our subscribers, do not invest in these unhealthy stocks. And people was like, well, but we can buy it at a cheap price. I said, that's besides the point. We don't want to get into unhealthy stocks. Why don't we find stocks that are healthy and are still above the blue line, the 50 simple moving average? And that's what we did. And so you'll find like Tesla, Apple, and all these tech stocks that everybody started saying, wow, they did well and they fed well in the pandemic. They were literally all above the 50 simple moving average. Whereas the ones that were down, like the airline stocks and the cruise line stocks, and they stayed down there for a while. Now, they might be bouncing back up now, but for the whole pandemic in 2020, they didn't really go anywhere. And that's because they were all below the 50 simple moving average. And so that's just one little aspect of saying, okay, it's not something new, but it's just, again, seeing that yield sign for what it really is for the first time. And then start paying attention. It's like, look, why are we even trying to do anything else if this stock is considered unhealthy? Does that make sense?
Yeah, that's actually really useful. So one of the indicators you're looking for to have a healthy is something that is above the 50 moving average, which a 50 period moving average means it's 50 days. So
Correct.
that means the price has to be moving in an upward direction over the last 50 days, which makes sense because you want something that is being consistently going up. That's actually a really good idea. So then you're looking for that, and then you look for patterns, different types of patterns after that very first filter, which eliminates everything else. That's very good.